You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again for Options Bootcamp, the premier options education program. Coming at you a little bit different day, not doing Education Wednesday today. We'll still have a lot of great content coming up for you tomorrow on Education Wednesday, including a twofer, a double header, a double extravaganza of Options Playbook Radio. Very much the sister show to this fine program. But we're coming at you a day early here so we could squeeze in not one, but two bonus fun episodes of Options Bootcamp. I will be doing a little holiday traveling next week, so we're getting two in the can to make sure you folks don't miss out. Of course, all you pro folks who join us live over there in the live chat, you will get access to these right now immediately in your ear hole, so no waiting for you. Everybody else, you'll get part two next week when it hits the network. Of course, if you want to join that fun party, you want to get all that stuff immediately in your ear holes, you want to get access to, I was looking at it the other day, the Pro podcast feed has nearly 200 episodes worth of content on it already. I mean, it's just a ridiculous amount of great Pro content we've already put out there for you. That's all available for you when you sign up over there, theoptionsinsider.com/pro. Of course, you also get access to the giveaways. Just gave away our November Pro Trading Crate. If you're active for the month of December, you get your name in the hat to potentially win the December Pro Trading Crate. If you want to see what's in it, just follow our Twitter. People are retweeting and sharing the images when their box arrives all the time. It's a fun little moment for a lot of our Pro members. Of course, theoptionsinsider.com/pro is the place to go to learn more. Or, of course, for you cool kids out there, you want your own URL, /secret club. And joining me today on the old program, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program, sir.
It is always good to be here, Mark. How are things?
Things are good, as they say over here. And you know what's also good, Mr. P here, is the love of our listeners. And we were saying on the show last week, you know, we've been neglecting all these years. We've been talking to all the people who've written in for over a decade now to leave us reviews, which we really do appreciate all of you. You folks are really the best out there. But we've been neglecting the international folks, haven't given them their due on the show. So let's go out here now. This is from Australia here. This is Cad Wales. I like the name. Cad Wales from Australia. He left us 5 stars in the iTunes store over there in Australia. He says, really enjoying learning about options. Oh, any tips for people trading from overseas? For example, where can one trade on a U.S. account? So he's got a question buried into his 5-star review as well, Mr. Dan. We're a little late to the party, Cad Wales. This came in a while ago. We've told you guys before, don't leave questions in the podcast reviews because it's not the most immediate way to get to us. And, of course, the international stores, we didn't even see it till recently. But, Mr. Dan, first off, what do you have to say to your buddy here, Cad Wales, leaving us some 5-star love from Australia? And then B, you must have had some international mentees come in over there at MTM. How do you normally guide them into trading a lot of U.S. products here?
Well, I love love, so thanks for that. It's nice to be nice. Much appreciated. And yes, we have many international student traders. Um, we've actually trained people in over 50 countries. And when we do, you know, we make sure that they have a platform that they can trade on because, like TD Ameritrade, you can't use Thinkorswim in a lot of places. So, we say interactive brokers or something like that. And yeah, I mean, basically, hey, options work the same no matter where you live, what languages you speak. It's all the same.
Yeah, it really does depend on the broker you want to use and whether or not they are approved for your region out there. I know a lot of big brokers here in the U.S., they can't play in all the different regions around the world. So maybe CAD Whales, if you have a particular broker, you mentioned IB, Dan, they're a very popular international selection. Again, I don't often go to IB right away for this show because they're very much for people who already are familiar with the options product. There's not a lot of hand-holding, not a lot of customer service to be found over there at IB. And I haven't gone and checked recently if IB is approved and ready to go for Australia, but I'll have to go check and see. It might be a good little side project to go see for the Aussies where you folks. We have people writing in all the time from Europe and a bunch of other areas. But we haven't done the legwork on the Aussies, even though we bring in Mr. Simon Ho, the Spikes father, over there on a Volatility Views show all the time from Sydney. So it's not an area we don't access all the time. It's just for whatever reason, we haven't gotten a lot of questions recently about this exact area. So interesting stuff. I think IB is a good choice for a lot of international traders. Again, if you can stomach the almost complete lack of customer support, it's a very experience for more sophisticated options users. If you're okay with that. Otherwise, some of the basic brokers out there, it's kind of hit or miss depending on which one is approved for your region. So if you have a specific broker you want to use, hit us up, CAD Whales. We'll look into it for you out there. But Dan is right. At the end of the day, an option is an option. If you're buying a call on Apple, whether you're doing it from Australia, whether you're doing it from Ohio, wherever you're doing it from, that call is still a call. It still works the same. It's just a question of how you access these markets. I'm assuming you do want to trade the U.S. markets too, because this is where all the options action still is. There's some warrants activity overseas in Europe. There are fledgling options markets around the world. There's this Kospi in Korea. There's, Shanghai rebar futures over there in Asia. There's a bunch of pockets of liquidity around the world, but nowhere is there the depth of options volume that we see here in the U.S. So a long way around to saying thanks for the review there, CAD Whales. Sorry it took us a while to get to your question. And yes, in general, I think IB is the one a lot of international clientele use. But again, I haven't checked to see if they're good for the Aussies. But maybe I'll look into that for you. As we keep on rolling into your basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
All right. Welcome to Basic Training, the portion of the show where we break down some basic options concept or strategy or technique and go in a little bit more detail, maybe explain how you can utilize it in your portfolio. Today, we're going to kind of pit some strategies against each other. But before we even get to that, Dan, really quickly, I did some quick research for our buddy here, CAD Whales, in our brief little intermission there. And it turns out, Dan, Interactive Brokers Australia Limited is licensed and regulated by the Australian Securities and Investments Commission. So it sounds like if CAD Whales is looking for a broker, IB could be a choice for him, sir. What say you?
Yeah, like the thing about IB is that they have a very robust platform, good data. I mean, the only negative is their customer service is god awful. I mean, it is just freaking terrible. But it always has been. That's just like, I don't know. I mean, it must be part of their business model. Maybe they intend to do it that way so that they don't have to field calls. I don't know. But, it's good tools to use. Absolutely.
TD looks like that's a no-go. But Schwab, which, that's what gets weird. TD is now a subsidiary of Schwab, right? So again, that's why it's kind of a crapshoot depending on where you're beaming in from, CAD whales. But yeah, sounds like IB is one you can go for. So I would check it out. Obviously, the other tip for trading internationally is get used to trading on U.S. time, which for the Aussies might be a bit of a challenge. You can be trading at some odd hours, but if you're okay with that, then another way to get acclimated to our markets. All right, let's get to our basic training here. And Dan, our basic training for this week is kind of inspired by our question of the week right now. You know, it is that time of the year, Dan, we are starting to come up against it. People are starting to look back on the year that was and indeed still is and ask questions. Top trade, interesting trend, all these kind of things that tend to encapsulate the year. So we did that this week with our question of the week, which was quite simply, which option strategy have you used the most in 2022? And we gave them a bunch of choices, but that got the wheels turning out there, Dan, of exactly what is the strategy of the year out there. Now, people might look at this year and say, oh, it's been mostly a down year. Therefore, it's been the year of buying puts, just like last year was the year of the meme stock call palooza. But not necessarily the case. If you bought puts in some names, it worked out. They shot down. If you bought puts, though, in let's say the SPX or SPY, it was much more of a challenging prospect out there. So you can't just off the top of your head say, okay, it was the year of puts and table the conversation. For purposes of our poll, Dan, we gave people 4 choices. We said butterflies or condors, so your spreads with wings categories, your long calls or your call spreads, or your long puts or your put spreads. And then we also flipped the script and put in their short puts or put spreads. But we've already had write-ins for other things. One guy wrote in, Bring Me Funny, he says, where's my gut and feel just gambling? I'm not sure if that's a strategy, but okay. Pro Buck said in a year like 2022, it's a shame that straddles and strangles didn't make the list. You know, I agree with you. Maybe if we had to do it again, we might put straddles and strangles, but we have seen so many line in the sand puts, as we call them, on shows like Options Oddities and the Option Block as well, that we kind of had to put short put in there. But I do wish there were more slots for more strategies. I certainly could have used one out there. But Dan, before we even get into what the audience is feeling, looking at what you've seen in the market, what you've personally been trading, as well as what your mentees have been trading and had success with, what would you say is your MTM option strategy of the year?
Oh my goodness. You know, I would say probably if I have to pick among these, probably short put / put spread.
You do not. If you want to write in an alternate strategy, if you want to go for ratio iron condor swaps, have at it, sir.
You know, I have been doing, since we launched Credit Spread Genius in particular, I've been doing a great deal of credit spreads, both call and put credit spreads. And that said, covered calls are something that I trade every day. I trade those every day. If you count a trade as being, I look at it, choose to stick with the plan and do nothing, I trade it every day. So I guess I'm giving you 2 there, Mark.
It's kind of hard to just say credit spreads, right? Because that encompasses so many things, right? There's so many different directional trades that all can be lumped under the umbrella of credit spread. So is there a particular credit spread you've been doing more than others, Dan?
I do. Well, there's a couple of categories. One is I do the ones that pop up on Credit Spread Genius, which are basically when a professional is identified as trading a call or put credit spread. Then I go through those and I scan them and I see which meet our criteria as well and trade them. But also I have been doing some of the 1 day and 0 day, either credit spreads or iron condors. That has been a thing that I've done this year.
0 DTE. Don't get me started on that, Dan. We have a whole separate conversation awaiting us a little bit later about all things 0 DTE, as I'm putting out the tweet here for people. And there we go. So they want to write in their write-ins right now. They can join us right now on the show live via Twitter, of course, at least via tweet. The live stream is for the pro members out there. But yeah, Daniel, this is an interesting one. I kind of wrestled with this myself when we first posted this because, again, the obvious thing a lot of people are going to go towards is the long put. But obviously, we've said on this show and other shows on the network, that's a much more nuanced prospect. If you just bought, let's say, a 10% out of the money put in SPY, if you did it early enough in the year, it worked out for you. But outside of, the initial sell-off there, really, it's been a challenging year to make those types of hedges pay off. For a long part of the year, we saw that put wing extremely bid. So if you bought puts any time in that period, they really didn't pay off at all. You probably lost money, even if you got the move you thought you were going to get because you just overpaid for that put. So the notion that this is just the flipping of the script of 2021, last year was just buying calls. This year is just buying puts. I can't get behind that. I'm kind of with you in the sense that I do like a good... For me this year, this has been a good year for nibbling on some names that have been beaten up. So in that case, the old short put, the line in the sand put, the put spread, all of those types of trades have been my preferred MO for this year. So for that perspective, that's again why we included that in the selections this year, as opposed to things like straddles and strangles, which are also fun, but probably a little bit more esoteric for most of you out there. So I did put that in there. That would probably be, if I went back and tallied it all up this year, that would probably be the strategy that was my go-to the most. Let's see, Dan, what do you think our audience is choosing before I reveal the results, sir?
But yeah, you know what? I am still going to go with short put and put spreads.
And you would be somewhat correct. It's actually a tie right now, which is interesting because the voting has been coming in fast and furious. This just went live yesterday, listeners, so you still have a few days to get in there. At Options is the place to find it on Twitter. If you don't see it at or near the top of our feed, just scroll down. We try to retweet it throughout the week as well, so folks who come in later can still participate out there. It's been a contentious one. Right now, Dan, we have an exact tie, unless someone comes in as we speak and clicks on it again. Is an exact tie between long calls and call spreads and short puts and put spreads. Both of them with exactly 31.8% of the votes, sir.
Wow, that's interesting. Both being positive delta, notably.
Yes, that's true. So some people are maybe thinking it's still 2021. They're loading up on the long calls here. That's interesting. If maybe this is a year you think things are getting beaten up, you go on the long call route. Kind of interesting. I'm not sure if that'd be my preferred route because obviously you need that turnaround to happen pretty quickly. But intriguing stuff. Maybe you go on the stock substitution route. I'd be curious. Maybe we need to do a follow-up. If you are buying calls right now, what are you doing? Are you just speculating? Are you going the crazy zero DTE route? Are you doing stock substitution? What is your use case for long calls right now? I certainly, as I articulated earlier, I certainly see the use case for the short puts right now as a way to nibble in some of these names where maybe you want to get put to stock. The long call, interesting. 20.5% behind it, Dan, for butterflies and condors and all of our spreads with wings. And then bringing up the rear, which I kind of thought would run away with it early on, Dan. 15.9% only for long puts and put spreads. Does that surprise you?
15%? No. I mean, I guess in hindsight, that doesn't really surprise me because, I mean, it is theoretically a price discovery process. Your dollar's your vote, and not everybody's going to vote the same way. And, there are plenty of perma bears and there are plenty of reasons to have been bearish this year. So, no, I don't know if that surprises me. I think it's logical.
I'm surprised that it was that low, just given the narrative that people had throughout most of this year, that this was just the year of puts. We did see on shows like the odd block segment of the option block, really, and Options Oddity, we did see people buying puts more than we traditionally do. So they were technically more popular. So I would assume, and people would just look at the overall broad market and think this was a year of puts. And so that would get a better showing than it has. But hey, the week is young. The vote is young. At Options is the place to go to make your voice heard as we get on into a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call, the portion of the show where you folks take the reins, your questions, your comments, your insights, your pearls of wisdom. Dan, I know you've been waiting all week. You've been dying to unleash this upon our listeners. Now is your chance, sir. What is your MTM question of the week, sir?
I was just on doing a one-on-one session, and one of the points that I brought up is that as we get closer to expiration, well, specifically when we get to expiration day, implied volatility sort of goes out the window and doesn't matter anymore. And that question was why? And it's an interesting discussion. I will try and be brief, though we could probably do a whole episode on it. But implied volatility measures only the extrinsic value part of an option premium. And when we're on expiration day, when the bell rings at 3 o'clock Central Time, there is no more extrinsic value. The option either expires and goes away or becomes stock, long or short by exercise or assignment. And so like the implied volatility just really no longer matters. And then, to put an addendum on that, me being a Greeks guy, the Greeks end up kind of going out the window too, because at the end of the day, there's no more theta, no more gamma, no more vega, and it's either a 0 delta or a 1 delta. So we could talk a whole bunch about all that, but that is something for the folks who, if this is the first time you've ever thought about that, take a little bit of time, meditate on that one for a bit. It ends up being very important, especially when we do trade 0-day to expiration things.
0 DTE. We will get to that. I think that's next episode. We'll get to that, listeners. But right now, let's go to some other questions out here. Let's see. Let's go to Jones. just straight up Jones. Welcome, Jones. Jones says, do you guys ever trade stock? Well, we were just talking about this earlier, Jones. I was saying I like to use short puts. Maybe it's in a qualified account or other areas for levels where I don't mind picking up some stock. That's a great entry tool to do so, and I have done that this year. So yes, the answer is yes. I mean, these are options-oriented shows, so we predominantly talk about options, and I don't sling a lot of stock, but you have some long-term qualified accounts, you want to put something in there. That's a great use case for getting a short put, getting into an underlying at a level you find attractive, and then you have that stock as your long-term buy and hold or whatever you want to do with it going forward. So the answer is yes, even though it's not by any means the majority of what I do out here. Mr. Dan, same question for you. Jones wants to know, do you guys ever trade stock?
Well, we got to keep up with the Jones question here. Yes, but I would say most of the time when I am making a trade in stock, it's usually an investment as opposed to a trade. Like most folks listening to this right now, I have my IRAs that I hold long-term equities in stocks. But occasionally I do trade stocks as well. Usually when the best way to trade it ends up being like a covered call or cash secured put, getting assigned and doing that. Now, to be fair, most of the time there's a better way to trade some of those scenarios than covered calls or cash secured puts. But sometimes they do end up being the best, not for an investment, but for a trade. But I would say as far as trading, like take away the long-term investments, 1% of my trades are stocks, maybe, something like that. Not even.
Yeah, if you break it down the way Dan does, which is investments, which is the way I was just describing it as well, the more longer-term trades. And yes, that's a different bucket entirely. That is where most of my stock trades tend to fall, the more of the longer term. I'm not in there usually slinging stock intraday. Not my bag, not my game, never has been. All right, unless I was out there hedging and trying to trade against my gamma out there back in the day, which is a conversation we've had on the show before, back in the market making days. And we won't get into that again. Go check out the archives if you want to learn more about gamma scalping and all that fun out there, listeners. Let's get out of here on this question from Ailes this week. Ailes has an interesting question. He wants to know, or perhaps she, is there any point to buying VIX puts when the futures are not in contango. All right, a lot to unpack here, listeners. Contango, backwardation, the two most common setups for the structure of your traditional futures markets. Contango is what you're used to, where you see a futures price and you go out in time and the longer term futures are priced at a higher level than the nearer term futures. It makes a lot of sense to people. It's intuitive. There's a time value of money, all sorts of other things, carrying costs that are baked into these markets that is reflected in that traditional term structure. And that's where the VIX futures usually hang out as well. Longer term volatility is usually higher than nearer dated volatility for a variety of reasons. So he's mentioning buying VIX puts. Traditionally, you buy them when the term structure is set up that way. The other way, of course, is backwardation, which is where the nearer dated contracts, the front month, second month contracts, are trading at a higher level than the longer term futures contracts. When that happens, usually there's something going on. Harken back to the Volmageddon of 2018 or the big sell-offs we've seen recently in the market, 2020 and others. Those were periods when the VIX futures were extremely backward and craziness was going on in the markets. Products tend to be backward usually for shorter periods of time and usually because something crazy or unexpected is happening in the underlying market. That makes the nearer dated contracts more uncertain than the longer term ones. And so you have no idea where things are going to go. And that's baked into that process. Now, traditionally, that's an environment where those front futures are very juicy. That's not where you want to come in and buy VIX puts because you want volatility to go down that slope nice and easily. You want the vol to come in if you're buying VIX puts. And that's usually a very favorable setup for contango. When things are backward, that means vol is juicy, vol is frothy, and it's not usually an environment where you want to buy VIX puts. With the exception being, Ailes, when the backwardation is about to come to an end. So if you think things are crazy backward, but that's about to end, and if in the case of VIX, backwardation doesn't hang around too long, and usually when it goes away, it crashes really hard. So if you want to take advantage of that move, then certainly there could be an opportunity to come in and buy puts on VIX when the futures are backward. But most of the time you're going to do it when the futures are in contango because that's the way the VIX futures normally trade. And that's usually the most favorable setup for buying VIX puts. All right, that was a long way around, Dan, but a very specific question from Ailes, which I welcome. We love the deep ones here as well. Dan, anything you want to add here for Wales on whether or not you want to buy VIX puts when the futures are not in contango, aka backward?
Yeah. So I kind of want to expand upon Mark's second point there because he kind of talked about two different trades, and like the first trade is sort of, hey man, everything's kind of cool. I'll buy some further out VIX puts up the term structure, higher VIX as you go out. But then the assumption is that as time goes on, that volatility comes down right along the curve of the contango. So, there's that. And I think that's what Ailes is thinking about when he or she's asking that question. But Mark's second point, I think, can be really, really, not second point, but second trade, it can be really powerful for buying puts because we see areas where the VIX stays at a level for a long period of time, and then it shoots up and shoots right back down. It's vol spikes, right? And so buying puts at or near the top of that vol spike, I mean, we never know when the spike is going to be, can be potentially very profitable. But the problem with that is the volatility of volatility. What is the IV of those VIX puts? Because a lot of times that IV gets really jacked. So I think in those scenarios, it can make nice long put setups, but a better way to do it is probably a put debit spread so that you spread off some of that volatility risk. In a perfect world, buying like an in the money VIX put and selling an out of the money VIX put so that you get close to being vague and neutral.
Yeah, it's very much a challenging trade there, Ailes, that ladder trade Dan was talking about. You have to have your timing has to be spot on. And if the futures remain backward throughout the holding period of that put, chances are it's not going to work out very well, which is why Dan is saying you want to add some sort of short leg against. That's typically our advice for most of our long premium trades here is you want to have some sort of short leg against it to mitigate your outlay in case the worst does come to pass. In this case, the futures remain backward throughout the entire life of your put. At least you didn't spend all that money on that trade. But that's an interesting one. Maybe we need to have more conversations about trading vol products on different elements of the term structure. If this stuff is over your head or you just want to learn more about it, then I encourage you listeners, check out our Volatility Views program that airs every Friday. Of course, it's on demand on the network. Like this show, that show has been running for over a decade, has many, many hundreds of episodes you folks to sink your teeth into, where we get into all sorts of fun conversations. Just like this, feature some of the best guests we've ever had in the network, including Nobel laureates and others. So check it out, Volatility Views. If you're listening to Options Bootcamp, make sure you're getting the full network because you're already getting Vol Views then. And if you're not, what are you doing? You're missing out on all this good stuff. But there's a lot more conversation to be had here, Ailes. I don't know, Dan, maybe we need to do a future episode on trading VIX options and all the nuances therein. What do you think?
Yeah, I think that sounds like that would be fun. Yeah, absolutely.
Now, listeners took us in all sorts of great directions this week. We had, of course, the international broker thing that kicked us off. I didn't realize there was even a question baked into that review, but he threw kind of a curveball question at us, which was fun. And then, of course, listeners debating what the trade/strategy of the year is, trading stock, and, of course, VIX puts when the futures are not in contango. So all sorts of fun to be had there. Of course, if you want more in your lives, listeners, just stay tuned. All you pro folks will be back instantaneously, Dan and I, with the next episode of Options Bootcamp coming in your hot little ear holes. If you're listening after the fact, of course, it'll be there next week for you. Mr. Dan, in the interim, if folks want to reach out to you and ask you questions, just like all the fun ones we had today, where should they go? What should they do?
Well, folks, make your way on over to markettaker.com. That's 2 T's in a row, and we'd love to be of any service we can to you. That'd be great. We love hearing from our listeners.
So if you need Dan to maybe clean your house or wash your car, he provides all sorts of services. Just hit him up over there, markettaker.com. Don't forget the second T for Theta. Markettaker.com is the place to go. We got to get on out of here, but don't you worry. We'll be back instantaneously for all you pro folks. And for the rest of you, back again next week, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.